Welcome to a Millennial's Guide to Real Estate Investing. Here is your host, Antoine Martel.
Hey everybody, welcome back to another episode of Real Estate Investing with Antoine Martel. Today I have a guest who lives in Long Beach, California. He's a millennial, real estate investor, has a full-time job. His name is James Allen. How are you, man?
Good, man. How's it going?
Very good. So we met a couple months ago. I think we met over Bigger Pockets. I thought you had a cool story. You were investing out of state. You had a couple of rental properties while working your full-time job, and cool story about James is actually he doesn't use any turnkey providers. He actually just finds these teams himself, and he analyzes the markets and finds a team, whether that be the contractor, property management, or realtor, to help him as his boots on the ground while having a full-time job. So thought I would bring you on to kind of share your story.
Yeah, well, thanks for having me.
No problem. So I guess let's start with, what made you interested in real estate investing? Was it, the long-term cash flow goals of you getting out of your day job, or what made you want to, and I guess piqued your interest in real estate and real estate investing?
Yeah, I mean, funny thing, man. It actually started with hitting a low point. Me and my wife were kind of living a paycheck to paycheck lifestyle for a long time. And my wife was pregnant with one of our kids. And it hit a point where she took a break from work for a long time. And during that time, we started cash flowing negatively as far as income was concerned. And we came to a point where we accumulated a lot of debt, hit about $25K in debt, actually, from a mixture of credit cards and different stuff like that. And I was just like, dude, I never want to hit this kind of point in my life ever again. And I was like, this is the worst feeling in the world. And I want to get to a point in my life where I can be wealthy enough to not worry about any kind of things or any kind of cost in my life. So that way I can be not just debt free, but kind of live a life of freedom where I can, afford my kids any opportunity they need, or, just never come back to that point. So anyway, I started doing research, and I was like, what do people do to become wealthy? And so I just started, doing a lot of research online, and over and over and over again, I kept coming back to real estate. And I saw stats like, 90% of millionaires are involved in real estate in some way or another, and things like that. And I started realizing, there might be something to this real estate thing after all, So that was kind of the beginning of it all. And from there, it was just focusing on a clear path of how can I get started on this journey to real estate. And I just decided that I'm just going to do whatever I have to do to become as knowledgeable as I can on real estate, because then I can become successful that way.
Gotcha. And then what did you do to acquire that knowledge? Was it podcast? A lot of people read Rich Dad Poor Dad, and it kind of sets them off this journey. Well, what was that trigger point for you after you did that research that 90% of millionaires became so through real estate?
Yeah, well, I mean, that's funny that you mentioned Rich Dad Poor Dad, because that was actually the first book I read, like so many other people. I got turned onto the Bigger Pockets podcast, and I listened to a few episodes of that, and people kept mentioning their favorite book was Rich Dad Poor Dad. It was kind of near the beginning of the podcast. And through that, I realized, well, if everybody keeps saying that's their favorite book, maybe I should start with that one. So, I started with that. And at the same time as reading that, I started like a video course as well with this guy called The Clever Investor. His name's Cody Sperber. And so he kind of does a video course on breaking down real estate. He kind of focused more on wholesaling aspect of things. But I was just kind of wanting to just acquire any kind of knowledge at this point. I didn't really know exactly which avenue I wanted to go down. I read Rich Dad Poor Dad, and that book completely shifted my mindset, understanding the difference between assets and liabilities, and completely got me on the mindset to, man, okay, I know what I need to do now. I need to focus on acquisition of assets and just anything I can do to make my money work for me, essentially. So It was a game changer.
Yeah, for me too. I mean, if anybody out there who's listening hasn't read Rich Dad Poor Dad, I would highly recommend it. It's the total mind shift switch for anybody who reads it, and using your assets to pay off your liabilities, your expenses, instead of
Yeah.
using your income from your day job. Um,
Mhm.
okay, so you read those books and you were interested in real estate, and then in terms of real estate knowledge, you did the Cody Sperber course, and then of course Bigger Pockets podcast, which I completely love, um, which where they interview a bunch of very successful real estate investors. I love listening to those as well, and you can learn a lot. Then what did you do from there? You had this knowledge. Did you ever go into wholesaling um, with the Cody Sperber course?
So it got me intrigued in it, and I kind of put a kind of a weak effort at wholesaling, and kind of decided fast that it wasn't the kind of thing I wanted to go for. So I kind of took the easy way out, I guess you could say. But I decided that I really wanted to focus on buy and hold, but I wanted to focus on buy and hold assets in the sense of not just kind of going for pure cash flow, but how could I scale in a faster way. And I felt like by identifying markets that have a lot of opportunity for appreciation, but yet still have good cash flow at the same time, I felt would afford me the opportunity to scale faster than just saving up for just one after the other, which is kind of, I guess, the one way to do it, but it's a little bit slower that way too. So I wanted to see how fast could I expedite it within reason to with not kind of sacrificing the cash flow at the same time.
Gotcha. Yeah, exactly. And then, so how did you figure out those markets? Were there any where right away you were okay with investing out of state, or was
Oh
there
no,
some?
yeah,
So tell me
no,
that, because for me, like, I started learning about investing when I lived in the Bay Area, and I was like, okay, I want to buy the house next door, of course, because I know the area, I know the neighborhood, right? But
exactly.
then you kind of slowly start increasing your geography, and you realize that you can't buy anything within 300 miles of where you live. So what was that progression for you?
Yeah, so the journey of kind of where I wanted to target was it was kind of a journey of while I was educating myself too. So if it to put it into better words, like I started off in California because, like you said, like the house next door is the kind of like the easiest way to go. You know the neighborhood, kind of what that looks like, and it's easier to kind of put it in your head of like, okay, well, I could drive down the street and check on my rental or whatever when you're kind of first thinking about things. But as I started understanding more and I read more books, and real estate and understanding the numbers better and what good cash flow actually looks like, I started realizing that I can't really find this here. This Southern California market has gotten way too hot. It's not putting forth the kind of cash flow that I personally want to see in my investments. Um, and so I realized I had to start looking somewhere else. And so I just kind of started exploring the idea. I researched on, plenty on bigger pockets, and I saw a lot of other people had been starting to kind of step into that same realm. So I realized it was possible, and I started reaching out to different people, and I kind of just decided that, I felt like this was the right move for me. It's funny. I was just telling someone the other day, like it's like some people will tell you like, oh, don't go out of state. It's too risky, this and that. And at first, when you're not really that well educated on it, you kind of take everyone's opinion at face value. And the only way I felt secure in my decision was to constantly keep educating myself to where I felt confident enough in my own opinion that I knew I wasn't going to be making a mistake by doing this.
Yeah, exactly. Yeah, and for me too. I mean, for me as well, because I again wanted to invest locally here in California. Realized cash flow didn't make any sense at all here, so had to force myself. I had my back against the wall, and I wanted to buy rental properties with cash flow. Had my back against the wall, and I was like, okay, where in the U.S. then can I buy these rental properties?
Yeah.
And through that research, like you, I found that out of state was the way to go, and I just needed to increase my knowledge of those places and make my knowledge of those places just as much as I have of my local market. And then whether that means cross-referencing people's information on the ground from property management to realtors or whatever it may be, or to actually go out to these markets and meet with the people and meet with the people who live in those neighborhoods, all that kind of stuff. And yeah, you're right. Like the knowledge made me definitely feel more comfortable of putting my own money and my investors' money into those deals out of state. But it does take time, of course, because investing locally, you already have all that knowledge. So you don't need to spend the time to go and get it because you grew up in that neighborhood or whatever it may be. So it's a much faster process.
Exactly.
Yeah. And then so what does your first deal look like? How did you figure out which market to buy in? I guess talk about that.
Yeah, great question. I mean, market wise was the first step for me. I knew before I could pull the trigger on any deal, I had to know which market I was going to target. And for me, cash flow was always first and foremost at the front of my priority list. So I found a list of some of the top cash flowing cities and areas, kind of bigger metropolitan areas and stuff. Um, and I kind of put together a spreadsheet and kind of weighed out a lot of the pros and cons of the area, things like, crime and job growth and population growth and, so many different aspects of, I guess, what was taking place there with economic development or, and so on and so forth. And I came down to Atlanta. Was my number one target for target market, and I saw so much good stuff going on there. Corporation relocations. It's such a strong, diverse economy. Strong rental market. The only thing that I saw, I guess, as a downside was the crime in that area. And but after doing more research in it, I realized that it's more about finding the right pockets and right areas within that area to be successful in avoiding high crime areas and everything. It's kind of funny. At first, before I kind of got to that point, I kind of thought I saw a lot of numbers of this place called East Point, and it looked from a numbers perspective like killer cash flow deals, and I was like, oh my goodness, this place is unbelievable.
Yeah.
After doing more research, I found out this place was like one of the most dangerous places in America. So
Oh my God.
I was like, thank God I didn't pull the trigger on something over there. And I actually did some more research. So that's why it's so important to anyone out there listening right now. It's so important to do your research and not just get kind of caught up in the numbers and go, oh my gosh, that works on paper. Because if your place is dealing with tons of maintenance issues and you're dealing with high vacancies and your evictions and stuff like that, it kills all your cash flow anyway. So it looks better on paper than it really is.
Yep.
But anyway, all that to say, I ended up settling on a suburb called Decatur, outside of Atlanta, about 15 minutes away. A lot of people were commuting from that area. And one thing that I really liked about that particular suburb was there was so much gentrification taking place in that area. And so I saw, because I actually flew out there.
Okay, so you went and visited, and yeah, because gentrification from being an out-of-state investor is pretty hard to navigate and know what's up and coming. Whereas if you just fly out there and go and drive the streets, you can tell what's happening and what neighborhood is moving and shaking. So that's good that you went out there and visited. It's a much better way to see that an area is definitely gentrifying.
Yeah, and one cool thing that I did when I was out there is I actually started seeing the signs of some of the companies that were actually doing some of these flips. And so I found them online, and I could actually find some of the houses that hadn't even gone on the market yet. And so I could see which streets were going to have renovated homes coming on them before they even were listed on the market.
Love it.
So yeah, so I kind of I took note of that, and I found a house, a great house, a single family house that was on a street that there had already been some renovated houses that had been put on the market there and had sold already. But I knew there were going to be more coming from driving the streets. I saw some work going on in some of the houses, and I was like, hey, this is really happening. And then I also saw it got to the point where the market in that area was 1 out of 3 houses put on the market was a rehabbed house. It was unbelievable.
Wow.
I'd never seen any other market like that, um, where it's literally 1 in 3. But it
Wow.
had just started to get to that point, and I think I kind of caught it just in time before it just exploded. Um, so that part of that is a bit lucky that I kind of caught it just in time, because if I would have seen it maybe like a couple months later,
Yeah.
I may have just missed out on a chance for even more appreciation and whatnot.
Yeah. Okay. So how did you, from your computer back in Long Beach, how did you come to the point of Decanter? What tools did you use, I guess, to figure out, all right, this is the place that I want to be? Did you ever get on the phone and phone call a lot of people, or
Absolutely.
did you use the web, what websites did you use, I guess, resources to get the info to actually book the flight, to go and visit it?
Sure, sure. So, I mean, I was using a lot of different sites to check out the area. I'm checking out sites, typical sites like, Redfin or Zillow or whatnot, just to kind of check out what kind of houses are on the market in the area. And you can kind of see, just from that, how fast, houses have been how long they've been on the market, or, basic things like that, at least to start off with. There's sites like City Data that I like to use for getting a kind of a more closer look at the sub markets and everything. And, I could see it had a strong rental market there. And there were a lot of good pros to it. And on a crime side of things, which I think was my kind of number two priority, from being out of state, um, it didn't look that bad. It was about a C plus neighborhood. It's maybe a C, kind of trending to B. And so I like the potential of it potentially going to that B area. So yeah, so I mean, sites like Redfin, I liked Rentometer to kind of use for calculating potential rents in the area. Um, but also Zillow and Craigslist, all those kind of things too.
Gotcha.
So yeah,
Gotcha. And then did you find a property management company and a realtor and all those kinds of things before you went out and visited?
yeah. So actually, I set up meetings in advance,
Gotcha.
and I met some people I met on Bigger Pockets, and then sometimes what I like to do is leverage those relationships. Oftentimes a realtor, if you find a good investor friendly real estate agent, they'll have some good contacts to go off anyway. So through my real estate agent, I actually got introduced to property management and lender through that. Of course, I still interviewed other people just to kind of have a balance of, people to weigh off each
Yeah.
other. I always recommend doing that.
Yep.
But ultimately I felt most confident with them. And I mean, my real estate agent was a seasoned investor as well, which made me feel even more confident. The way I like to utilize my agent is to also give me insights into the market and stuff like that as well. So
Love
yeah,
it. Okay, cool. Yeah, so I've done that as well. So when I'm building a team too, of course, do all my research up front, know the market like as well as I can from the computer, and then I go in and I make a bunch of phone calls, try to set up meetings on the ground, and then whether that be with everybody, right? So property management companies, realtors, contractors, if needed. If you're doing some really nice rehabs, then you may want to meet with some contractors and see their work. But yeah,
yeah,
definitely, making those meetings up front and then booking your flight and having because many people like you who are millennials who work full time don't have time during the week to go out. They can't take the week off, right? So they got to do everything in one weekend, or take Monday or Tuesday off. So do you remember how you played that? Did you take the whole week off to go and visit, or did you do it over the weekend? Were you working during that time?
yeah. I was working, so I don't remember exactly where it fell in the week, but I know that I definitely took some vacation time to make
Yeah,
that happen, or I kind of wiggled it around to make that work one way or another.
gotcha. All right, cool. So then, all right, so you went and visited. You had all these meetings with a bunch of different people after you've done your homework, and then did you from those meetings that you had, you kind of said, okay, you went home and thought about it, and you realized who your team was, and then how did you come up with that first? Was that where you bought your first property? Was in Decanter?
Yes, exactly. So I actually visited the property that I no, no,
Oh, really?
you know what? I didn't actually, because I actually was under contract on a duplex, which I fell out of.
Oh, okay.
So then I went back, but I had already knew the area. So then when something came up, I knew it was a good deal or bad deal at that
Yep.
point. So then, yeah, I actually didn't end up going to visit for that property. I didn't need to do that because I could have my real estate agent go in with video
Yep.
and check it out for me, and I didn't need to be there physically at that point
Exactly.
to do that. You have
Exactly.
inspections and stuff for that
Yeah, I
stuff.
love that. Yeah, I love that. Doing your homework up front, booking a bunch of meetings, going and meeting those people who are on the ground. And then once you're on the ground with those people, kind of figure out, all right, this is my team. And then from there, you kind of just sit and wait, is what I like to call it. Just sitting and waiting on Redfin for that deal to come up that you can hit.
Yeah.
And then once you do, then you send your realtor or property manager, whoever it may be, to go through that property, take photos or videos, and then send your contractor through as well to get the rehab bid. At least that's how I do. Is that how you did it after that trip?
Yeah, and one thing I guess you made a kind of a good point there is, waiting on the Redfin to alert you. Like I set up alerts on all my sites that I use. So I'll typically use, Zillow, Redfin, Realtor.com, like all those sites to
Yeah.
notify me immediately whenever something in my parameters comes up. It will immediately send an email to me. And when you're dealing with kind of a market that has some competition, it can be very handy to be the first one to get in there and maybe even
Exactly.
snag the deal.
Yeah, exactly. Yeah, for me, especially in my markets too. I mean, speed is, and especially in Atlanta where you are. I mean, geez, it's so competitive over there right now. The market's just completely exploded. That every deal that comes on the market has 10, 20 offers on it. Where,
Seriously.
some of my markets there may be one or two, and just because of the way that my markets are positioned or whatever it may be. But still, if I don't act fast, those good deals are swooped up by the big guys really fast. But so if you can be, very nimble and on your toes, and it could be a little bit difficult if you do have a full time job and you have to check stuff during the weekend, or after work. So I guess how do you handle that then? Working full time, let's say a deal comes up in the middle of the day, is your job flexible enough to where you can check it on your phone and run the numbers on your phone and send it over to your boots on the ground, or how do you kind of manage the work your work balance with your investing? Are do you have any sort of flexibility during the day?
Yeah, so I mean, what I have is, I typically start at 9 in the morning. So I'll typically have like breaks throughout the day. Like I have like a 10 a.m. break, I have a 3 o'clock break, and then I got my lunchtime. So I just try to utilize those times to the best of my ability, you know, and then I can, run those deals during those times and whatnot.
Love it. Cool. Yeah, and that's what's very important too about finding a very specific neighborhood that you want to be in, because then if you only have, let's say, an hour and a half during the day to be, while your team is working, to actually be looking at deals, there's only so many deals that you can analyze in an hour and a half or look at.
Yeah.
So setting your targets again, and choosing a very small neighborhood that you like, that the numbers work well in, and just setting your targets and waiting for something to come up. That's a good recommendation. And then, so what does your first deal look like then? So you were under contract on a duplex when you went and visited, but then you came back home. You were like, all right, this is my team that I'm going to move forward with. And then, how long did it take you to get that first deal under contract that you ended up moving forward with?
Yeah, so it was actually the next month. About a month later, I found a deal that I put an offer in, and I actually had two offers in at the same time, but the other one didn't work out. I didn't win that offer for that one, but I won the offer for this one. Um, so yeah, so 3 bedroom, 1.5 bath, single family house.
Nice. And so, was the property vacant? Was it listed on the market?
So you know what? It was listed on the market. It was a MLS deal. It had a Section 8 tenant, which at first scared me to death when I saw that. I saw Section 8 and I heard so many nightmare stories about Section 8, and and that's where I think it helped having a an experienced investor that was also my agent, because he assured me that although it's a Section 8 tenant, it doesn't automatically guarantee that they're going to be bad tenants. There are good stories with Section 8 tenants, and that was kind of my understanding. Okay, maybe I need to look a little deeper into it. And I realized when I was doing my due diligence on the property, I found out that the tenant had always been paying on time, that the tenant was had been there for almost 23 years. So I was talking about potentially maybe not having to really deal with too much vacancy issue. So that kind of gives you some upside to your return on investment as well. And so when I kind of started to, look at all that and check out the rent rolls and all that stuff, I realized, maybe this isn't going to be too bad of a situation, even though it's a Section 8 tenant.
Yeah. And then so you bought that property, and then I'm assuming you didn't put much money in. Did you do any repairs after you bought the property?
So you know what? The property was in rentable shape already. I mean, it wasn't in phenomenal shape, but all it really needed was basically some gutters and downspouts. So that was, you're talking about like $1,300 there or something. So it really wasn't that bad. Yeah, I mean, I got the house for like $63,000. So
Okay.
yeah,
Cool.
20% down on that is not too bad.
Yeah. Okay, so then about property management, did you just use the same property management company that was currently managing it?
Um, no, I
Or
didn't.
was it not?
I switched it over to the property management I met
Okay.
my real estate agent.
Nice. Okay, so and that's one of those. Oh, okay, was it so it was a referral off of your realtor?
Yes, exactly.
Love it. Yeah, that's something that I tell people to do all the time is just make all those phone calls, however many it is, 20 or 50, to all those different people on the ground, realtors, property managers, contractors, banks, etc., and then just ask them for referrals, and you'll see what names keep popping up, and then call those people. And then when
Exactly.
you're there, make meetings with those people who are top recommendations of three or four different groups, and those are going to be your teams who you should move forward with.
Yeah.
So Section 8 tenant, do you still own that property today? Is the tenant still there?
Yes, tenant's still there, paid on time every month.
Nice.
We've managed to raise the rent a couple times in 1 year, which is kind of funny because I guess it was already under market rent when we acquired it. But because it's a Section 8 tenant, you're dealing halfway with the housing authority of the
Yeah.
county. And so our property management was great. And they had a 100% success rate with raising rent with the housing authority in that county, which was awesome. So we just went for it, raised it right off the bat. Within a couple months, we were had raised the rent, and then we were able to recently raise it again this year as well. So
Love it. Awesome. And then so for the down payment for that 60 grand is around like 15 grand. Did you just have that from saving up from you working and saving up your Christmas money, or how'd you
yeah.
is that how it was, and then you were able to get a conventional loan just through some bank, whether that was it a big bank that you used or
Yeah, so we used a mortgage broker, and so he basically, for those that don't know, a mortgage broker shops around different rates versus a mortgage lender, which will just basically give you, they are basically the direct person you are dealing with for the loan. So we went through a mortgage broker, and yeah, basically shopped around the rates and everything, and
got it.
yeah, went about
Cool.
it that way.
Cool. And then you were able to get a loan because you had been working for, I'm assuming, 2 years or more, which allowed you to then be financeable, right?
Exactly.
All right, good. Yeah, that's an important point too. And a lot of people listening are out of college or never went to college and have some sort of income, maybe with a W-2 job. But to get the kind of financing that James is talking about here is, you need what's called W-2 income, which is pretty much working as an employee for a company for 2 years. It doesn't need to be the same company, but you need 2 years of solid income and solid tax returns in order to get a mortgage. So
Yeah.
that's why it's important to, if you are working full time and you want to acquire rental properties in this fashion that James is talking about, or buying turnkey rental properties, it's important to keep your job so that you can be financeable and you don't have to go through a commercial lender and pay higher interest and get worse terms. So I guess after that purchase that you had, then what did you do? Did you own it for a couple of months and then just kept looking for more deals in Decanter, or how did your deals progress after that?
Yeah, so I mean, yeah, I held it for a few months. I kind of wanted, because it was my first deal, I kind of wanted to take it one step at a time and not try to go too fast on it. But once I had everything, kind of in place and rolling, we started looking for deals again, and I had started talking with my brother about what I had been doing, and he was highly interested in getting into the real estate game too. So I started saving up again. Me and my wife, we live very frugally, just so that we can save up as much money as we can for these investments. And so we just kind of went back to it again and kept saving up and kept saving up. And I found an opportunity. But this time it was an indicator though. And the thing is like I said before, I kind of got one of those last deals in that area before it exploded. I was kind of lucky in that sense. And so it was harder to find deals in that area once the summertime and springtime hit. And so I found a multifamily in another market. And normally, up until then, I hadn't really been kind of scouting out. I try to stay, for the most part, focused in on, where I'm going to invest in.
Exactly.
But I think I was just kind of having one of those days where I was really bored, and I just kind of started zooming out on Redfin and, getting rid of the barriers of the edges of everything. I was like, what's out here? What's out there? And then I just randomly found, this triplex that was on the market and had just been listed maybe 6 hours ago or something at the time. And I was like, whoa, this is actually a good deal, but I don't know anything about this market, so I can't possibly do this deal. And plus I don't have the money. So I just gave up. No, I'm just kidding. So what really happened?
Well, next story.
No, so I started figuring out, how can I make this work? How can I do this? So I ran the numbers. It made perfect sense. And I started just immediately putting all the effort I could into studying this market, seeing what was going on, and it's kind of similar to what I said before, with Atlanta, analyzing every aspect of, from crime to schools to, economic development to all these aspects you want to look for in a good market. And whilst it didn't seem as strong, and I guess I don't know if I've mentioned it, we're talking about Knoxville, Tennessee right now. But whilst it didn't seem as strong as Atlanta, which was kind of Atlanta's kind of a powerhouse right now, it's killing it. But whilst it didn't seem as strong as that, I did see some potential in what was going on, and I liked what was going on in that area, and most importantly, the numbers worked too. So
and so was it a duplex, or how many units was it?
So this was a triplex, so a three unit building.
That's right.
And like I said, I didn't have all the money to make the purchase, and I was thinking, okay, I'll just save up down the road and eventually get it. But when this deal came on the market, I talked to my brother, who I had already kind of been introducing to real estate and getting him on some books and stuff to read and everything, and I walked him through everything, and he got really excited about it, and so. We knew it was a great deal, and we were one of the first ones to see it. So I reached out to an agent and touched base and confirmed with the agent that it was a good area. But what I always like to do is cross-check, because sometimes, be careful. Sometimes real estate agents are salespeople, so they want to make their commission.
Yeah.
So I always like to have at least two people I'm checking with at the very minimum. So I called up a property management as well, and got their thoughts on the area as well. And they confirmed it was also in a good area as well, and it was, by an area that was really up and coming and stuff like that. So anyway, things made sense, and me and my brother decided to go in on it together, 50-50. And so yeah, so we ended up making an offer, and we ended up getting it.
Wow. That's crazy. So how many days do you think it took you to do all that research and find all those teams while working full time?
Well, I was up almost all night because
Oh
I
my
found it.
gosh.
I found it at like 8 o'clock or something like that, or maybe it was, yeah, maybe like 8 o'clock at night my time, and sometime in the evening after dinner. And I just spent literally the whole time just researching that area over and over again because, like you said, area houses can go so fast, and so I really wanted to, if it all made sense, I wanted to make an offer within the next couple days at least. So yeah, so I just was pretty much as I could. I think it was on a weekend too, so I was able to work it where, the next day was, no work or anything like that. So I was pretty much just,
Yeah.
yeah, real estate junkie that day.
Wow. And then how did you find time to call all those property management companies and realtors in the new Knoxville market if you only have did you really call them on your breaks and on your lunch and stuff like that?
Yeah, absolutely. So yeah, come to think of it now, so it must have not been on a weekend. It must have been on a maybe a Thursday or something. But yeah, but I absolutely utilized all my breaks, and I even got up extra early too because the cool thing about dealing with Eastern Standard Time is they're 3 hours ahead. So if I get up at 6 a.m., it's 9 a.m. over there. So I could utilize my time even better by getting up really early in the morning, and I could start reaching out to them first thing when I woke up.
Love it. Love the hustle.
Yeah.
And then so how did you find your property management companies there? And then for this deal, did you actually go out and visit this market as well, or did you close on it before visiting?
So yeah, I definitely visited it as well. So I flew out there, and yeah, I set up a bunch of meetings with different property managers, and um, at this time I didn't go too strongly off the opinion of the real estate agent, just because I hadn't had a long much of a history with this agent. I kind of was, kind of in a rush dealing with it, which typically I wouldn't recommend to people, funnily enough. But it was just kind of the nature, I guess, of the beast on this one. So
Okay, you made an offer, put it under contract, and then I guess you just booked your flight right away, huh?
yeah, pretty much, yeah,
Oh
exactly.
wow.
So I had my due diligence period, so I was able to work it around, and yeah.
Okay, and then do you still own that deal today? Was that deal already rented out?
Yeah, so that deal had two of the units rented out. Um, yeah, two units were rented out, but then we had to, well, a very unfortunate situation happened where one of our tenants committed suicide a
Oh my
week after
god.
we closed on it.
Wow.
Yeah, it was crazy. It was absolutely crazy. And but this is where having an experienced property management really
Yeah.
came to into play. And they were amazing with the way they handled the situation. And of
Wow.
course, we felt terrible for the guy and the family, because I literally met the guy before we closed on it and everything, and he seemed fine and everything.
Wow.
But yeah, I mean, we did what we had to do, and we cleaned it all up and got it all uh, back on the market and everything within a month, or maybe like a few weeks or so.
Wow. That's crazy. And then so did the property besides that need much work done to it, or was that third unit kind of just needed a clean up and then it was ready to go?
Yeah, so the other one was it just needed some maintenance to be done to it. And there was some rehab needing to be done on that triplex. Like we had to put a new HVAC system on, and there were some opportunities for increasing our net operating income, like submetering the water and to the tenant, and submetering even the electricity wasn't even submetered. Funnily enough, it was like because the HVAC systems was like one system for like two of the units and stuff like that.
What?
And yeah, it was
Can
terrible.
can you explain what sub metering means?
Yeah, sure. So when you're dealing with multifamily, um, oftentimes you'll find like when you talk about utilities like the water, um, most commonly the water more than anything. Like you'll see that the water pretty much is just one water meter keeping track of the whole property, of how much water usage is taking place. But the problem is because there's only one water meter and there's three tenants, you can't accurately figure out who has used how much water. So you end up oftentimes being the one that ends up having to foot the bill for all the tenant water usage. But if you can, we figured out that because we actually had two water meters, funnily enough, uh, for three units, which was weird. But we were footing the bill for everybody because, again, it was still kind of one of them wasn't registered properly and all that kind of stuff. But we realized all we had to do was add one water meter, and then we could sub-meter it to all three of them. And that one water meter cost $1,400, but our water bill was about 140. So we basically would make all our money back in a year if we just sub-metered the water. So yeah, so those are kind of cool little value adds you can do on multifamily
Yeah.
to.
Yeah, and especially, and imagine if there's a it comes into play too when you're dealing with a lot larger buildings, of course, when you have, 10 or 20 units, 30 units, and the water is not sub-meters. There's only a couple of water heaters or water tanks, water meters, I mean. Then it becomes a huge play and a huge value add component when buying these larger multifamily buildings, because you can go in and just sub-meter everything and save a ton of money on utilities and utility bills. And a lot of mom and pop landlords don't know that, or don't even want to spend the money to to save that cost. But in the end, in the long run, it saves a ton more money than it costs.
Absolutely.
Yeah. And so, are you still holding that property today?
Yes, yeah, it's turned out to be a great cash flowing property.
Awesome. And then since then, have you bought more deals in that same neighborhood? And was this neighborhood a gentrifying area as well, or was it more of just a blue collar neighborhood?
Yeah, kind of. I guess kind of a little bit of both. I mean, the specific area is a bit more blue collarish area, but it's kind of neighboring areas are kind of gentrifying a bit. So
Gotcha.
um, yeah, so that's kind of the
Gotcha.
situation with that.
And then, is there any crime in that area too, or is there no crime in that Knoxville neighborhood?
Yeah, it's pretty good for crime as a whole. Actually, Knoxville in general like has
Yeah.
pretty crime rates to pretty much all the way around. You
Yeah.
know.
Yeah. Yeah, I love it. Yeah, because for me too, one of the things, and I was listening to another podcast last week, I think, and it was like the one thing that you can't change is crime in a neighborhood. You can remove crime from your property if you have like a large multifamily, but don't think you can come in and change a neighborhood and make it all pretty and nice and rid the crime. It takes years and years and years to do that, and it takes the city needs to be behind you, and the mayor needs to be behind you in order to get
Yeah.
those kinds of jobs done. And yeah, so I
So
steer I
true.
steer clear for I steer clear from crime as well. And that's funny too that you mentioned the Section 8 tenants as well. I have been staying away from Section 8 tenants as well for a really long time. And then I bought a property with a Section 8 tenant in there, and that tenant had been living in the property for 10 or 12 years or something like that. They'd been paying every time on time, and I was just like, okay, well, I'm going to let her stay. She's paying market rents, and I'm guaranteed a check from the government. And sure, it's
Exactly.
Section 8 tenant, but she's been there for 12 years, and she has her retirement is just her social security is just paying her so that she can live there, etc. So it was like in the end, it became like a really perfect scenario. And something too that I learned about Section 8 was that if they wreck your property or do some damage to your property before vacating, let's say their lease is up and they need to leave and move. Let's say if the property is extremely damaged for whatever reason, then they actually lose their Section 8 voucher, so they can't actually go and rent another property through Section 8. So it's a
Oh,
very strict system, and the people who are in there who keep moving around or continually use Section 8 are typically vetted pretty regularly, and then they are also checked up upon they do like Section 8 inspections as well, I believe. Have you been having those on your property where they come, I think they come every 6 months to come and check up your property and make sure it's still fit to the Section 8 standards?
That's funny. Yeah, I don't know anything about that happening. Maybe that's because they've dealt mostly with my property management and not me. So maybe that's what that is.
Yeah. Yeah. But it's something too to not be scared of the people listening, to not be scared of Section 8, and if just run your numbers as if it were any other deal, and don't be scared of a Section 8 tenant. You're at least guaranteed some money from the government, and
Yeah,
sometimes the tenants out there on the market are even worse than the tenants that you can be
so true. So
guaranteed rent. Yeah, depending on where you're investing.
yes,
Yeah.
yes.
All right, so Knoxville, and then what was so you've had done 4 deals in total. So what did the other two look like, and where were those deals?
Oh, sorry. I've done one other deal besides that one.
Okay.
So I also did what they call wholetailing. So that's kind of like basically a flip, except you're not actually renovating anything really. Yeah, so I got that deal in Atlanta. Um, and Yeah, one of our wholesalers that we had built a contact with, he sent us a deal that was a killer deal. I mean, we were looking at the comps, and literally in the last 9 months, this was like the lowest priced house that had come on, and it's been like the area had gentrified since then and everything. I was like, oh my gosh, this is insane.
Wow.
So yeah, we ended up paying for that in cash, and we borrowed some money. We utilized I utilized my parents' money as well with my brother and I, and we all four of us kind of went in together on that deal. Um, and yeah, all we literally did was, because the thing is for me, I knew we could have probably flipped that and made a nice killing on it. But I think just from being out of state, running a whole flip whilst having a full-time job just seemed like
Daunting.
really big undertaking. You know what I mean?
Yeah.
So I just felt like, you know what, we could still make a pretty nice killing even without doing anything to it, and literally just putting it on the MLS. And so
Oh,
that's
that's what
literally
you
pretty
did.
much all we did is we bought it off market, and we literally just cut the grass essentially. Um, yeah, it's our cut the grass split, and because it was a horrible landscaping they had done, so we literally just took care of that, and yeah, we just literally threw it back on the market as is, trying to appeal more to an investor, who would want to flip it or something, or maybe use it as a rental, because it was actually in semi-rentable shape, actually, to be honest. So it could appeal to, multiple investors and stuff. And it was vacant too. So of course, a flipper could do something with it too. And so, yeah, we threw it on the market, and yeah, it was a great deal, and we made a nice little profit out of it.
Wow. And
And it was,
yeah, and how fast were you able to turn that over?
yeah. So literally from the minute we closed on buying the property to the
Yeah.
minute we had closed on selling the property, it had been just over a month.
Oh my God.
So it was
I've never heard of anybody doing that before. Oh
yeah,
my
it was
God.
crazy.
Wow. So you literally bought, so you imagine getting a deal from a wholesaler in your inbox. You bought it with all cash. You cut the grass and took some better photos, maybe. Or
Yeah.
literally just cut the grass and then retook some photos, put it back on the market, put it on the MLS now, and then you kind of just sat and waited for offers to come in.
Yeah, and we had a
Wow.
lot of competition for it too.
Oh my God.
We had
And
multiple
so, and you already had your team on the ground there, right? So you had your agent and property manager to help you with doing that.
Yeah,
Love it. Love it.
absolutely.
That's awesome. So where did you actually list that property on the MLS with that agent who had helped you in Decanter?
No, so I ended up going with an agent who was more, because this was actually not in Decatur, this property. It was in another zip code neighboring Decatur, but I was actually pretty familiar with the area. Um, and I just decided to go with an agent that was selling in that area more so, just to kind of go with someone that was, I guess, had more local knowledge of that specific zip code and whatnot.
Got it. Love it. That's awesome. Yeah, definitely. I've never heard of anybody doing that before. I mean, most of the deals I get from wholesalers are either too overpriced, or their ARVs are way off, or their
Yeah.
rehab estimates a fifth of what it should be. That's crazy.
Yeah, it's so true.
Wow. Okay. Is there anything? So we're getting up to an hour now. I'd like to keep them at an hour. Is there any um, recommendations, I guess, you would have for millennials who are looking to get started and maybe in a situation like you with a full time job and want to get into real estate, but don't really know how to take that first step and maybe don't have enough money to get started?
Yeah, I mean, I would say definitely educate yourself, spend time getting to learn what you're doing so you can avoid most of the mistakes you can avoid. You're always going to make something wrong, but you can at least mitigate a lot of the risk that way. Try to get to know people that are trying to do the same thing as you, because you're going to be way more likely to succeed in what your goal is if you're surrounded by other people shooting for that same goal.
Love it. Awesome. Yeah, and going back to that, I mean, the way that we met, I think that either I hit you up on Bigger Pockets on a direct message, or you did to me, or vice versa, just because I read your profile, you read mine, whatever it may be. And, we both said that we were young guys who were investing out of state and had a couple of properties under our belt. And I was like, okay, let's meet for lunch and chat about it then. And that's literally how we met. And now we can bounce ideas off of each other and talk to each other if anything ever were to come up in one of our different markets.
Absolutely.
Love it.
100%.
Love it. Great recommendation. Well, thanks for coming. If people want to get in touch with you, what's the best way to do so to maybe ask you some more questions?
Yeah, I mean, you can find me on the biggerpockets.com website. Just search my name, James Allen, and I'm sure you'll find me from the LA area. So you'll be able to find me, no problem.
Love it. Awesome. Well, thanks for coming on the podcast. That was definitely helpful to people out there who want to get started, and to share your experience and how you got started just a couple years ago. And wish you the most success, and we'll be talking to you soon.
Thanks, man. Thanks for having me.
Thanks. No problem.